April 28th, 2025, 11:43 p.m. In my home office in Palo Alto, I'm staring at a financial model that makes no sense. I've been analyzing venture capital for 18 years. I understand risk. I understand volatility. But what I'm looking at on this spreadsheet isn't risk. It's chaos that has become systematic. My name is Jennifer Kawasaki. I'm 44, a managing partner at Horizon Ventures, a mid-sized VC firm with $680 million under management. And this spreadsheet is showing me something terrifying. Every single one of our portfolio companies with cross-border operations now faces unpredictable cost structures due to Trump's tariffs. Not challenging, but unpredictable. Meaning we cannot model their future because policies change daily with presidential tweets. Our top 3 companies, a clean energy startup, a medical device manufacturer, and an AI hardware firm, have seen a 35 to 60% increase in the cost of goods sold, COGS, since Trump's Liberation Day tariffs. Their business models are collapsing in real time. But it's the comparison tab that truly devastates me. I track Canadian tech companies for potential investment. Their cost structures are stable. Their growth projections are meeting targets. While Canada's Q1 2025 GDP grew by 2.2%, the OECD downgraded U.S. growth forecasts from 2.2% to 1.6%. TD Securities is now warning of a 50% chance of a recession in America. I pull up Mark Carney's November 4th budget. $78.3 billion in strategic investment. Infrastructure, defense, housing, efficiency, real planning, predictable policy, competence. Then I pull up Trump's Truth Social feed. Tariffs are working. Weak countries begging for deals. More tariffs coming on semiconductors. America is winning. One of these governments is creating investable business environments, and the other is creating chaos. And I made a decision that was unthinkable 6 months ago. I am moving my entire venture capital operation to Toronto. This is the story of how Trump's policy chaos didn't just hurt American companies, but caused American capital to flee north, and how Mark Carney's competent management made Canada the unlikely winner of America's self-inflicted economic crisis. Let me take you back to March 2025, before I understood how profoundly Trump's policies would destroy American VC competitiveness. Horizon Ventures, founded in 2014 with 2 partners after spinning out of Sequoia. We focused on Series A and B investments in hardware, clean tech, and deep tech, companies building physical products, not just apps. Our portfolio: solar grid technologies, next-gen solar panel manufacturing, $18 million. Series B in 2024. MedTech innovations, AI-powered surgical instruments, $24 million. Series A in 2023. Quantum dynamics, quantum computing hardware, $32 million. Series B in 2023. 2024 Clean Air Systems, industrial carbon capture, $21 million. Series A in 2024, plus 11 other companies in similar sectors. Total portfolio valuation as of March 2025, $890 million. Our fund ownership, approximately $680 million across all positions. Expected returns, 3.2 times over 7 years, top quartile performance. We were highly successful. Happy limited partners. Planning fund. 3 at $1 billion. I was living the dream. A $4.2 million home in Palo Alto, equity partnership, $480,000 annual compensation, and a carried interest that could be worth millions when companies exited. My husband Marcus was at the Stanford Research Institute. Total household income, $650,000 annually. Our 2 kids were in excellent public schools. We had made it in Silicon Valley. until Trump's tariff regime made the phrase, "We made it in Silicon Valley," increasingly meaningless. Trump's Liberation Day tariffs went into effect on March 15, 2025. An instant 25% tariff on a wide array of imported components: steel, aluminum, semiconductors, rare earth minerals. Basically, everything a hardware company needs. The name Liberation Day was Trump's greatest irony. He was supposedly liberating American companies from profitability. Within a week, every company in the portfolio was sending me updated financial projections. They were all catastrophic. Solar Grid Technologies. Solar panel manufacturing relies on silicon wafers, imported from Malaysia, and polysilicon from China. Component costs increased by 42% overnight. Their $18 million runway is now projected to last 11 months, not 18, requires immediate bridge financing or closure. MedTech Innovations. Surgical instruments use precision steel from Germany and Japan. Component costs increased by 38%. Existing hospital contracts suddenly became unprofitable. Either renegotiate contracts, lose customers, or operate at a loss, burn cash. Quantum dynamics. Quantum computing requires exotic materials sourced primarily abroad. Some components are literally not available in domestic U.S. supply chains. Cost increases ranged from 30% to 180%, component dependent. The entire business model is now economically questionable. This wasn't theoretical. The idea of holding emergency board meetings and making survival plans was real. I spent March and April in constant crisis management, bridge rounds, layoff planning, pivot discussions. Every conversation was damage control. Meanwhile, I was watching Canadian tech companies, competitors to our portfolio, operating normally. Their costs were stable. Their growth continued. There was no tariff chaos in Canada. A Canadian quantum computing startup, a direct competitor to Quantum Dynamics, raised a $40 million Series B in April. Stable costs, predictable environment, global supply chain access via CPTPP and other Canadian trade agreements. My portfolio company, with superior technology, was struggling to raise a $12 million bridge because investors couldn't model the cost structure. That's when I started asking the dangerous question: what if the problem isn't our companies? What if the problem is America? April 15th. I'm on a Zoom call with potential LP investors for Fund 3. We're trying to raise $1 billion. "Jennifer, your past performance is excellent," says an institutional investor. "But we are concerned about the current operating environment. How are your portfolio companies managing the tariff situation?" "We are working closely with each company to optimize supply chains and manage costs," I say diplomatically. That's not an answer. Given the current policy instability, how do you project the fund's performance? Silence. Because I don't have a good answer. How can I project returns when government policy changes via tweet? When costs can jump 40% overnight based on the caprice of a president? We are modeling various scenarios. Have you considered geographical diversification? The Canadian tech ecosystem is attracting significant capital right now, specifically due to policy stability. The government is genuinely investing in innovation. Carney's budget has $110 billion for productivity initiatives. After the call, I do something I've never done before. I seriously research venture capital in Canada as an alternative to Silicon Valley. What I find changes everything. Canadian economic reality, Q1 2025. GDP growth, 2.2% annualized, beating expectations despite U.S. tariffs. Mark Carney's November budget, $78.3 billion in strategic investment, $51 billion in infrastructure. Actual plans, not tweets. $8.8 billion in defense. NATO 2% commitment, more reliable than the U.S. right now. $25 billion in housing. Canada builds housing program. $110 billion in productivity initiatives. AI, clean tech, quantum. Policy. Stability. Multi-year planning. Predictable regulatory environment. Business environment. Nurturing and attracting global capital. U.S. economic reality. Same period. OECD. Downgrade. Growth forecast, cut from 2.2%. 1.6%. TD Securities, 50%. Chance of recession by Q4 2025. Policy environment. Daily changes via presidential social media. Business planning. Virtually impossible for cross-border companies. Tariff regime. Largest increases since the post-war era. No clear strategy, pure chaos. The Bank of Canada. Research that broke my brain. I found a Bank of Canada study on U.S.-Canada income inequality. This is what shattered all my assumptions about American superiority. 75% of the U.S.-Canada income gap is accounted for by the top 10% of Americans. The bottom 90% of Americans and Canadians have essentially similar living standards. But Canadians get universal health care, better education outcomes, lower crime, stronger communities, more economic mobility. For the vast majority of people, including tech workers, Canada offers an equal or better quality of life. My entire career, I had assumed Silicon Valley was the peak, that America was clearly superior, that Canada was nice, but inferior. The data showed I was wrong. For everyone but the ultra-rich, Canada was actually better. Even for the rich, better became increasingly debatable when your portfolio companies were collapsing due to policy chaos. May 8th, the annual LP meeting in San Francisco. We present our portfolio performance to our limited partners, the pension funds, endowments, and family offices that entrusted us with $380 million to invest. I show them our returns, strong on paper, but every forward-looking projection is now qualified with assuming stable policy environment or subject to tariff regime changes. Then the Canadian Pension Fund LP, which invested $45 million in our fund, asks the question I had long dreaded. Jennifer, we appreciate your candor on the policy headwinds, but we're wondering, have you considered moving your fund operations to Canada? We are seeing significant capital flow into the Toronto and Vancouver venture ecosystems specifically because of the policy stability. Many US-based VCS have already set up Canadian entities. Frankly, given the current conditions, we would prefer a Toronto-based Horizon Ventures over a Palo Alto-based one. The room falls silent. Other LPs nod their heads. An interesting proposition is all I can manage. We will certainly explore all options to maximize return. Immediately after the meeting, my partners and I have an emergency huddle in a conference room overlooking the bay. They're right, says Michael, my co-founder. We can't raise Fund 3 in this environment. LPs want stability. Trump is giving them chaos. We either adapt or we die. You're talking about leaving Silicon Valley, I say. Moving to Canada. That's insane. Insanity is trying to run a hardware-focused venture fund in a country whose customs policy is economically suicidal to hardware manufacturing. Look at this. He pulls up a chart of venture capital investment flows. US VC investment dropped 28% in Q1 2025. Canadian VC investment increased 34% in the same period. Capital flows to stability, like water flowing downhill. Look at Carney's budget, Michael continues. Canada is spending $110 billion on productivity, AI, quantum computing, clean energy. This isn't political rhetoric. This is real, allocated capital. Meanwhile, Trump is tweeting about tariffs that are destroying the very sectors we invest in. I go home and tell Marcus everything. My husband, a brilliant physicist who has lived at Stanford for 15 years, is silent for a long time. You know what's crazy? He finally says. I'm getting recruitment calls from the University of Toronto. They're building a $2.8 billion quantum research institute. It's better funded than Stanford right now because the Canadian government is investing in science, not whatever the hell Trump is doing. So you're open to moving? Jenny, I'd better be. America feels like it's losing its mind. Every day, a new policy that makes no sense. Another crisis manufactured by a tweet every week. I'm exhausted. And honestly, the research environment in Canada looks more promising than anything here right now. June 2025. We formalize it. Horizon Ventures is moving its main operations to Toronto. We aren't leaving the US entirely. We'll keep a small office in San Francisco for our existing portfolio companies. But the new investments, the new fund, and the core team, all Toronto-based. The reaction from the VC community is split. Half think we're crazy. Half are quietly asking how we pulled it off because they're considering the same move. One prominent Silicon Valley 5C, a man I've known for years, called me out. Jennifer, you're making a huge mistake. Silicon Valley is still the center of global innovation. Canada is nice, but it's not America. What is America right now? I ask him. A country where business planning is impossible because tariffs change daily? A country where the OECD is downgrading growth forecasts and TD Securities is predicting a 50% chance of recession? I can't deploy $1 billion in that environment. My fiduciary duty is to the LPs, not to the mythology of American exceptionalism. But the talent is leaving. Our portfolio companies are already hiring Canadian engineers because they can no longer reliably get US visas. Stanford researchers are taking positions in Toronto because the funding is better. Talented people follow stability, not flag-waving. He has no answer. July and August are a logistical blur. We incorporate Horizon Ventures Canada. We set up the Toronto office space, 8,000 square feet in the Mars Discovery District, the heart of Toronto's tech ecosystem. We move our family, selling our Palo Alto home for $4.1 million and buying our Toronto home for 2.8 million Canadian dollars, 2.1 million US dollars, pocketing a $2 million difference. Marcus accepts a position at the University of Toronto's new Quantum Institute. 180,000 Canadian dollars salary, 135,000 US dollars equivalent. Less than Stanford, but lower cost of living and better research funding. My partners and I restructure. I will run the Toronto operations. Michael will manage the existing US portfolio from San Francisco, and the third partner will split his time. The kids are surprisingly excited. Dad says Toronto is really diverse, my daughter says. And the healthcare is free? That's so weird. Weird. Free healthcare is weird to my kids who grew up in America. It says everything about what we've normalized. September 15, 2025. We officially launch Horizon Ventures Fund 3, $1.2 billion in committed capital, headquartered in Toronto. The LP reaction is remarkable. The Canadian pension fund that suggested the move commits $80 million. Two European institutional investors that had previously passed on our US-based funds commit a total of $200 million. Even some US-based LPs increase their commitment specifically because we are now Toronto-based. Your relocation was the signal we needed, says one US foundation. It shows you are adapting to reality instead of clinging to ideologies. That's what we look for in fund managers. Our investment thesis is simple. Invest in companies operating in stable policy environments, primarily Canadian companies, plus European and Asia-Pacific companies serving the Canadian and global markets. Shun companies dependent on unpredictable US policy. In October, we make our first Canadian investment, a $25 million Series B in a Montreal-based AI chip designer. Their costs are stable, their supply chains are reliable, and they have global market access through Canadian trade agreements. The deal process is so much smoother than recent US deals. Regulatory clarity, predictable timelines, a government that actually understands tech policy. It's October. I've been living in Toronto for 3 months. Here's what I've learned. The Canadian tech ecosystem. Rapidly growing. Not Silicon Valley scale yet, but the trajectory is steep. Government support is real. The $110 billion productivity investment isn't rhetoric. Talent is strong. Top universities, an immigration system that actually works. Policy stability, multi-year plans instead of daily tweet changes. Quality of life, healthcare, education, safety. Objectively better for most people. The American tech ecosystem, still bigger but shrinking. VC down 28% and falling. Policy chaos. Business planning is impossible. Talent worries. Visa restrictions. Researchers moving to Canada/Europe. Economic trajectory. OECD downgrades. Recession warnings mounting. Quality of life. Great if you're rich, alarming if you're not. Personal financial reality. Toronto. Housing. 2.8 million Canadian dollars versus 4.2 million. USD Palo Alto. Smaller house, better neighborhood. Healthcare. $0 versus $2,400 per month. US family plan. Massive savings. Education. Excellent public schools. $0 versus potential private school costs. Crime. Dramatically lower. Kids have more freedom. Community. Stronger social fabric. Less inequality. More cohesion. Overall, better quality of life at a lower cost. That Bank of Canada study about the bottom 90% having similar living standards? It undersold Canada's advantages. For professional families like ours, Canada is actually superior in many ways. The most striking evidence of Trump's policy failure. The divergence in portfolio company performance. U.S.-based portfolio companies. March-October 2025. 3 companies required emergency bridge financing. 2 companies shut down completely, couldn't secure funding in the chaos. 4 companies laid off over 30% of their workforce. Average revenue loss against plan. Negative 34%. Why? Policy instability makes business operations impossible. Our new Canadian investments. July to October 2025. All hitting revenue targets within 5%. 18% ahead of Plan 0, emergency financing needed. Consistently hiring. Why? Stable policy environment allows for actual business planning. Same investment team. Same due diligence process. Same support model. The only variable is geography, and that variable is decisive. American exceptionalism was always predicated on America having superior policy, infrastructure, and business environment. When Trump's chaos removed those, the exceptionalism vanished. November brought a vindication I didn't want. I wanted to be wrong about America's decline. The OECD released updated forecasts. U.S. growth cut to 1.3%. Canadian growth upgraded to 2.4%. TD Securities raised the probability of a U.S. recession to 65%. 3 more, U.S.-based VCS, announced they were opening up shop in Canada. One prominent Sandhill Road firm is moving entirely, similar to our move. Meanwhile, Mark Carney's budget investments are breaking ground. Infrastructure projects are beginning. Defense spending is increasing. The Canada Builds housing program is commencing construction. The productivity initiatives are funding real companies. Competence, it turns out, matters. Who knew? I got an email from the famous VC who called me crazy in June. Jennifer, I owe you an apology. You were one step ahead. We are exploring Toronto options now. Any advice? I send him our relocation guide. Because despite everything, I don't want American VCs to fail. I want American policy to stop being crazy so they don't have to move. But I am not optimistic. December. A year since I first started seeing the warning signs. 6 months since our move. Marcus and I are walking through Toronto's Distillery District on a Saturday. It's snowing. The kids are at a friend's house. We feel a peace we haven't felt in California in years. Do you regret leaving? He asks. I regret that leaving was necessary. America should be the place where innovation thrives. Instead, Trump has made America the place where innovation flees. Do you think it's permanent? The decline? America's size and wealth mean it will never truly collapse. But not collapsing is a low bar. Canada isn't winning because it suddenly became spectacular, though Carney's competence helps. Canada is winning because of America's self-destruction. That's so sad. That's so sad. It's tragic. America had every advantage: the best universities, the biggest capital, the largest market, the most talented immigrant pool. And Trump's chaos is squandering it all for what? Tariffs that destroy American companies? Trade wars that drive away investment? It's self-immolation. We walk in silence for a moment. But we're good, Marcus says. More than good, actually. He's right. We are thriving. Better house, better community, better schools, better research environment for him, better investment environment for me. We don't worry about healthcare. We don't question the safety. The bottom 90% that the Bank of Canada research said included us, despite our wealth, is getting better outcomes in Canada. The data was correct. It's January 2026, a year since Trump's inauguration, a year of policy chaos, 6 months since our move. Here is what I learned. American exceptionalism was always conditional. It depended on America having exceptional policy, infrastructure, and governance. When those vanished, the exceptionalism vanished. Geography is not destiny. Competence is. Capital follows stability. Venture capital is not patriotism. It flows to achieve returns. Returns require predictability. Trump's chaos made America unpredictable. The capital left, mine included. The bottom 90% always knew, the Bank of Canada. Showing the bottom 90% had similar living standards? Those people always knew Canada was similar or better. The people who bought into the American mythology were the rich, like me. We were wrong. Size doesn't matter. Without competence, if policies make doing business impossible, America's larger economy means nothing. Canada's smaller but stable economy beats America's larger, chaotic one for actual investment purposes. Brain drain is real. Marcus isn't the only researcher leaving. Stanford, MIT, Caltech, the talent is flowing to Toronto, Vancouver, and Montreal. Not because Canadian universities are better, but because Canadian research funding is more reliable and immigration is more sane. I am 44. I built a 20-year venture capital career in Silicon Valley. I believed in American exceptionalism. I believed America was the only place that mattered for innovation. Trump's chaos didn't just challenge that belief. It economically invalidated it, not through arguments, but by making American operations financially impossible, while Canada, under Carney's competent management, flourished. I am now a Toronto-based venture capitalist. My fund is outperforming what it would have done if we had stayed US-based. My family is happier. My quality of life is higher. And every day, I see more American talent and capital making the same decision we did: to abandon chaos and embrace competence. Trump's legacy is this: making America so unpredictable that even Americans with every reason to stay are choosing Canada. If that doesn't tell you everything about failed leadership, nothing will.